Now, I don't know if that audio was just skipping in my ears or not, but welcome out to our halftime report here, presented by Tackle Trading. We've got Coach Mark, Coach Tim, and Coach Cody here to break down the action. Market is red. It is Red Dead Redemption again here, Cody, where the market is turning over. It's probably not the same as what we saw in October and last year. In fact, it 100% is not. But it is a down day in the market. We're going to help you guys understand it and analyze it and break it down. First things first, let's bring in Coach Mark. Mark, how you doing today?
I'm eating Pringles.
Pringles for breakfast.
Is that our unofficial sponsor?
No, because they're terrible. I can't really sponsor them. I only bought them because they were on sale.
I got to tell you, I've never had a sleeve of Pringles and felt good about myself after. I will tell you that. It is not exactly... They're fine. They have a tastiness. I'm not going to.
Fine, but I'm certainly not going to promote them because they're terrible. If you can get them for under $1 a can, fine.
All right. Bring your screen up, Mark. Let's break down the markets one at a time. S&P, Twitter earnings, quite a few things going on. The global growth slowdown. And Larry Kudlow, in an interview with Fox Business News, I believe, said that Trump and President Xi were probably not going to have a meeting at any point soon. These are new storylines in old storylines that have been evolving now for a year or so. Mark, let's start with the S&P. Give me a read on what's happening in the market.
Well, I mean, you have your first negative headline really negative headline in forever. I mean, you've been in a very easy trading market, and you have a negative headline. Headline's red. Larry Kudlow came out and said, trade war, still got a ways to go. There was a rumor circulating that the president of China and Trump won't meet before the deadline on March 1st. So in this 2019 wonderful bullish, you have a couple negative headlines. Market's going to sell off on a day like that. But there's nothing structurally different. It's like we were talking earlier before we had our show. If you just got into a trade yesterday, you don't like today's headlines and the negative temporary sentiment if you just got into a trade the last couple of days. If you were looking for a pullback, then this is kind of good news. Like, I do not see, let's not mince words. I don't see, this is not October. This is not last February. This is not anything other than headlines dragging the market down in an overall bullish trend. And that's all it is. It's not that big a deal.
No, I think as long as
unless you put it on a trade yesterday, then
you're probably stopped out if you try to play a breakout yesterday. But I do think that the S&P can maintain a bullish posture and a slight bullish bias as long as we hold 262 on the S&P right here, Mark. SPY is the ETF, the biggest ETF, most liquid ETF in the entire marketplace. It tracks the S&P 500 index. I've got support right at 262. Some people would even put it at that 260 mark. Where do you have support on this chart, Mark?
Well, since I use moving averages as my support, those three short-term moving averages, and let me clear this up as much as possible. Those three short-term moving averages, the 5, 9, and 20, some combination of those are always a bull's best friend on an uptrend. You saw numerous times during any bull market. I mean, we just go to one of the most bullish stretches we've ever had. You never had confirmation on a close below with confirmation, the 20-day moving average from September to January, this huge 5-month stretch. So during bullish runs, we see that, hey, there were a lot of down days during that stretch. There were a lot of weeks where the market slid off. But after those temporary headlines, after that temporary sentiment faded out, off and up we went again. I mean, this is normal price action. You don't go up every day. And certainly when you get a negative headline, that stupid trade war has in the last year, no storyline has ever created more out of nowhere headlines than the trade war. Just can't plan for it. You don't know when they're going to occur. It absolutely stinks. And it really stinks for directional traders. But does this have the potential to shift the trend? Maybe a little bit towards sideways for a little while. That's not going to hurt your covered call investors. That's not going to hurt your cash flow investors. It's going to hurt temporary entry points for directional traders. But it's normal price action. And for me, it's absolutely nothing to be alarmed about. In fact, I'm excited because it gives me the ability to find some good entry points for stocks that I might want to own.
You know, I was talking to Matt about it the other day, and when the market was showing the little doji candlesticks, I asked him, is this a pullback? And he said, no. I think he would say yes now, percentage-wise. And his thing was there wasn't enough distance from peak to pullback to call it a pullback yet. As we're fading in here, pulling back here on the S&P at 267, you only have two candles coming back down here, red doji, red candle. Do you wait for further distance? Do you let these moving average play themselves out? Do you stock pick? How do you play this condition personally, Mark?
Well, I mean, this all goes to your trading plan. Now, one thing, if you are a pro member of Tackle Trading, you hear us religiously talk about your trading plan and your trading rules so that you know exactly how you play them. Now, we have a lot of different perspectives from the coaches at Tackle Trading, and I think this is a strength. We have a lot of different ways we do things. And then you as the student, as you listen to our live shows, come to our Traders Lounge, read our blogs, absorb all of the content we put out, we hope that you formulate and create the rules that when pullbacks occur, you know exactly what you're going to do. Now, rules are critical because they help erase the emotion. Mm-hmm. So let's take a situation like we have here, the SPY. For me, my own personal rules are a little bit different. So let's say I was looking to re-enter into the SPY. I get a situation where I've done my analysis and I feel that this is a good pullback opportunity, which I do 100% feel this is a good pullback opportunity. Then I go to my rules. Now, my rules are there to help me determine and help save myself. Because let's say I'm dead wrong. Let's say on new entries, I'm like, oh, wow, my read of the market was totally off. Hey, happens. Mm-hmm. It happens. But my rules, as long as I follow them, help save me from myself. So in these situations, my own personal rules is I go to the hourly chart. So I have my setup on a weekly or daily chart. I use multiple time frame analysis where I'll look at the weekly. And let's just do that. I'll look at the weekly and be like, all right, so I'm in a positive situation on the weekly chart. Like the trend, like where I am in conjunction to moving averages, like the momentum. I go to the daily. I perform the same exercise to make sure I go through that. And then for my specific entry, I will go to the hourly chart. And this is how I play every pullback. Those hourly moving averages, I will wait for price stability.
And I wanted to add to your hourly, on the hourly, the 200 is what the S&P is bouncing off right now on the ES contract. So I'm looking at it. It looks good.
No, now you're probably looking at futures and you're probably looking at a continuous moving average.
Yes. Yeah.
That's the situation. That's a whole different advanced lecture. But I'll wait for a close above and then confirmation above the hourly moving averages, which sometimes can take several days. And that's fine. I don't care when I make my money. I care that I put myself in the best situation as possible. The best situation as possible. So when I get a pullback situation, I wait for those hourly moving averages to come down, close above, and then confirmation in the next hour, and then I enter my trade.
I like it. Multiple time frame analysis is an important part of any trader's development and understanding in the market. Weekly, daily, hourly, even monthly. Sometimes you'll go back when you're looking at market posture. I've even had traders, Mark, that will go down to a 3-minute chart or a 2-minute chart. When you day trade, if you day trade, do you break that down all the way into that short of a time frame?
Well, it depends on what type of trade I'm trying to do.
Mm-hmm.
Now, most of the trades I do these days are not day trades or even shorter term swing trades. I've really shifted in the last year from hyper scalping to more of an intermediate looking for, multiple week opportunities, multi-week opportunities. For example, Boeing is a stock which I think provides that potential opportunity. I think you have a breakout, a great catalyst. Here Boeing is selling off, providing a potential great entry point in the coming days. You don't know when it will occur. And so when I look to do something like that, then I do just what I was talking about. Now, but let's say I'm looking to do a day trade or something. Same general principle. I wait for some level of confirmation, usually on a 15-minute or a 5-minute chart, where you see reversals occur, where it catches those short-term moving averages, providing a nice entry point. And it's just how hypersensitive do you want to be to the price action?
Mm-hmm.
My favorite is the 13 or 15-minute chart. It's a nice blend of short scalping between that and, hey, maybe I get a run throughout the day. But most of the time, and most traders out there that are listening right now, are looking to not day trade, looking to do things that maybe have a little more legs, few days, few weeks type of trade.
Yeah, and I think the swing trader out there, which a lot of people end up doing swing and position style trading, I think the first time frame to add, and there's 3 that I recommend for swing traders: the weekly time frame, so you can see the bigger picture, right? Take your eyes back a little bit and look at the big picture, but the hourly time frame or the 30 minutes, somewhere in there, Mark, to be able to find those pivot points and those trigger points and really understand the trend. Really good tips on the multiple time frame analysis. On the S&P today, we've got the advanced decline line at 100 versus 400. 97 companies going up, 403 companies going down. The most traded company on the S&P today in many days is GE. Stock is down 4%. Bring GE up if you would.
Oh my goodness, we're going to waste time looking at this dog.
Well, that's my favorite thing. I love it when GE sells off. It is now still in a short-term uptrend. I'll respect it, but if that thing turns over and sees weakness, you could be seeing the lows at some point this year again. AMD's down 3%. A lot of the chip makers, and they were doing really well. Yesterday showed a lot of strength. I like this pullback, Mark. In fact, that old pivot point, as it is pulling back, these red candlesticks are developing. 1, 2, 3, 4, 5 candles coming back down here. Where do you see a catalyst for potentially on AMD?
I actually talked about AMD the other night in the coaches show, and I gave it my thumbs down on directional plays and feel like it's going to range trade for a while. I don't think the sentiment behind AMD is strong enough to send it up and away. It's not like we had in August, and it's not like we had during that huge run up. The sentiment's just not there. But for cash flow traders, individuals looking to buy AMD, do covered calls, I think it is a positive environment. Now, you always want to optimize your entry points. And so finding some kind of stabilization, whatever that signal is, a close above a moving average on a longer time frame. Everything I just told you about the hourly chart is what I use for directional trades. On a stock like AMD, I want to be a little more cautious, because if I'm doing a covered call, I'm going to be in this stock for several months and maybe even longer. So I think AMD is a good cash flow stock for covered calls. I think that's the setup. I don't like it for directional trading at all right now.
What do you think of an idea like this? It's Theta Thursday, and one thing I want to do today was talk about selling a naked put on stocks you would be willing to take assignment on.
Who coined the name Theta Thursday?
Theta Thursday, I don't know. It's an alliteration.
Not sure why.
Yeah.
I
Does
don't
that bug you, or do you love it?
I like it. It's so cheesy. I like it almost.
Yeah. Theta Thursday.
I actually kind of like it's cheesy, but I like it.
In fact, let's get a hashtag going here, guys. Halftime crew, put in hashtag Theta Thursday, and let's see if we can start something. I do like the name. It is a cool name. I
And
think it might have
if
been
you're new
Matt.
out there, if you're a new trader out there, what is theta? So they know what we're talking about.
Yeah. Theta is the measure of time decay. So every option has the option Greeks that measure their performance and the characteristics of how they should behave if conditions change. And there are many characteristics. The price of the option, okay, it will move up and down as the stock price goes up and down. That's delta, right? You have the volatility of the underlying. That's vega. And you have time until expiration. And it's measured on a day-by-day basis of how much that option will bleed in time. Imagine if you had a big block of ice out in the backyard in a summer day and you had a barbecue. It's measuring how fast the ice is melting, right? And the option is the ice in terms of the time decay. And one thing I want to do here today with Theta Thursday, hashtag Theta Thursday, right? Love that, is do a naked put on something you'd be willing to own. And AMD is a good covered call candidate. It's dirty, sexy money the whole way. Definitely a high ROI, high volatility kind of candidate. If I went down there all the way to the 17 strike mark in March, now it's not a lot of money. I only pick up a dime. But if I sell the 17 strike March put option, a dime, and let me look at the margin requirement on that. I can actually build that for 180 bucks.
All right, let's be real, men and women out there, and let's not be these cowardly. Let me sell it clear down at the support level.
I would sell the 20 strike is what I would do.
What's that 21 in March selling for?
21's too high of a delta. It's 31. So I get it. 86 cents. 86 cents is what you'd pick up. 20, you get 55 cents for a 22 delta. And that's more in line with delta rules that I like. I prefer a lower delta on that.
I think delta is the stupidest thing ever created in the stock market.
It's mathematics, Mark.
I know, and it's the dumbest thing ever created. And I
hate the number 7.
Like delta.
I hate math. I've hated it since the 3rd grade.
Now, why do you hate it? I'm interested now.
I think delta rules are dramatically misused. I think they teach people to be automated traders rather than master traders. I understand how the guides.
Yeah, it's different levels though, Mark. I mean, when you're working with somebody who's brand new and trying to get some consistency on how they build something, you have to use a delta rule for that consistency, right? Now, once somebody understands the delta rule and there's going to be some subjectivity to it, I see where your point is. I know where you're going. I think you're right in that regard. I don't have to become beholden to the delta just because, but that's more if you're an advanced trader. If you're a trading expert, you can use whatever delta you want, right? Because you'll know why. You like the 21 because a 31 delta, and it's also at the old pivot point. Is that right?
Well, it's below the 20-day moving average, which means there's a good chance that 20-day moving average catches it. It's also in the middle of the range. Now, all of this is prefaced on, do I feel comfortable owning AMD for several months?
Mm-hmm.
And I do. And I do. So I don't think there is tremendous negative sentiment in the market. I don't think there's tremendous negative sentiment around AMD. I have a very hard time seeing AMD just tanking in the next few months. And so I'm comfortable owning at 21. That's the level I'm comfortable. Plus I get $86 by selling that put. So really, I'm owning it at $20 and change.
Sure. Yeah. And the
that's
20
price level I'm very comfortable owning at.
Well, and the 21 strike on margin, not special or portfolio margin or anything like that, you pick up that $84 on $290, you know. So to put the naked put on, you need about $300 to hold that option. But the more important part, and this is very, very critical if you're ever going to sell naked puts with the intention of delivery, you have to think about the capital it would take to own that stock if they put it to you, right? So $21 a share, 100 shares in an IRA style account, that's more like $2,100.
But going back to your, what was it, 17, you get $10.
It's not your bag, baby.
That's not my bag, but that is at support level.
Mm-hmm.
There is a very low chance. There is a very low chance that you would get put the stock. And if you do get put the stock, you're getting it right at support. So let's fast forward a couple of days. Let's say the market does sell off. And this is how I like to trade. I like to look for opportunities.
Mm-hmm.
And so let's say AMD sells off a few more days. Let's say it's down there, it's dropped $1, dropped another $1.50. Well, all of a sudden, you're not getting $10 for that 17 strike price anymore, are you? You're getting $25, $27, $30, depending on how far it draws.
Mm-hmm.
And that's when I get really excited. I'm not terribly excited. I know AMD comes up all the time. It is a very popular stock to analyze at Tackle Trading.
Well, it traded 57 million shares today, so it's always on people's radar, you know.
It is a very popular stock. But what I like is I like those ideal opportunities where you can make great trades, not good trades, great trades. And so if you want to make a great trade on AMD, wait for it to sell off. Wait for it to sell off. Maybe it does, maybe it doesn't. And then target that that $18 strike price in March. Very optimal situation in that situation. That's a great trade.
One of the reasons why this came up is I saw in the clubhouse, Solene had a question, one of our team tackle members, about AMAT. In fact, bring up AMAT right now if you would. And she was asking this essential question: should I sell a naked put on AMAT if I'm willing to buy it? Now, they have different characteristics here in one very, very important regard. We could debate and look at the validity of the trend reversal on both. You know, you could take your pick. You could say you like one or the other. And I think that analysis would be important analysis. But AMAT has earnings next week, and AMD had earnings last week, Mark. So when you're looking at scenarios like this with that intention of naked put to delivery, how do you deal with the earnings? And how would you answer that question to Solene?
You have to. Okay, this is where you know if you're bullshitting yourself or not. Sell a naked put, and if the price is going down, you'll know if you really want to own the stock or not. So if I sell a naked put, then I'm going to get put those shares if it goes below my strike price. So if I sell a 37 naked put on Applied Materials and it starts going down, you will really know if you actually want to be put those shares or not. Because if you start to worry that you're going to get put the shares, then you really didn't want to own them. So I would, some version of this question always comes up. And they say, well, if I actually want to own the shares, is it good to sell a put before earnings? If I actually want to own those shares long-term, I'm not talking a couple months, I'm not talking 6 months, but hey, I've been looking for an opportunity to get into this stock and I want to own it as part of a long-term portfolio. I have no problem selling a put into earnings.
Mm-hmm.
But you better be able to answer that question with the affirmative, with that long-term view. Otherwise, never sell a naked put into earnings unless it is part of some kind of advanced volatility strategy.
Well, and here's my challenge to that, though. I mean, if you want to buy the damn stock, just buy the stock. Why naked put before earnings? You don't have the upside. If you catch a big run on earnings, then great. And if you want to hedge the earnings, buy the stock and buy a put before earnings. I don't know. I get it, and I'm open-minded to it. If it's me, though, I probably either buy the stock and do it as a caller and open the risk graph, or I just wait till post earnings. I much would prefer AMD because we've already known the reaction to that instead of an AMAT in front of it. But I could see why a trader would want to do it. But you're right, though. Emotional response to that stock going down is the test of whether or not you would want to buy it or not. By the way, we're getting great chat in the YouTube channel. Great to see you guys. Hashtag Team Tackle. Welcome out, halftime crew. Mark, let's keep breaking down the market. One stock that was really in the news today was Chipotle Mexican Grill. And
I'll give you a ticker symbol. I'm blanking.
CMG.
Yeah,
CMG.
I got it. Hey, CMG. Now, for those who have only been trading a short time, CMG used to be a trader's darling. I mean, you had tremendous price growth up into 2015. You went from, what was it, $50 to $700 in the course of a few years. It was a huge, popular, very bullish stock for those long stretches with insane price appreciation. Then a series of negative news events hit. Yeah, I don't know if any of you remember the headlines: rats
Yeah,
falling from the ceiling.
they were putting Ebola in the burritos, right? Or
A
E.
lot of
coli. I
there,
think
there,
Ebola would be worse, by the way.
there were health concerns, there were sickness concerns, and then there was the headline. I literally, this is a true story. I absolutely kid you not. I did a naked put on CMG that night. So I did my naked put way out of the money, really, really, really low delta. That's not why I chose it, but I did a way out of the money naked put on CMG. I went to bed and I was going through my newsfeed that night, and literally the headline came across the ticker: rats fall out of ceiling at a CMG, at a Chipotle restaurant. And I just started laughing. I was like, it's probably not something, there's probably like the worst headline you could see other than like the whole company closing down. You do a naked put and then rats fall. I barely got out of that and was able to do some advanced trade techniques to break even on that trade. But boy, did that put pressure on that out of that money put. So yes, rats falling out of the ceiling, sicknesses. It caused a huge shift in sentiment for a few years. Now that sentiment with a new CEO and some positive earnings have definitely helped shift the short-term trend. After trading sideways for a long period of time, we've definitely are breaking out on its new earnings, breaking out. But this is one of those stocks that has been a darling in the past. The last few years, not as much, traded sideways for a long stretch, but it definitely has the potential. And I haven't been able to go into that earnings report, but the sentiment has certainly shifted on that. Earnings reports have been generally positive. And this is a type of stock that can be a darling.
It can be. I will tell you this, emotionally, Matt will not have it on his darling list because he hates this company with a deep, deep, deep passion. And simply because it's overvalued for just making burritos. That's growth, though. Those are the type of companies that can take off and run. It is clearly in an uptrend, destroyed the earnings. And they actually announced a really interesting thing. They're going to put drive-thrus for the Chipotles. And so that you can drive up, get a burrito. Makes sense to me.
Company. I love their food.
Their food's good. I actually think as long as it doesn't make you sick, right? That's the whole point. I think they've had.
As long as rats aren't falling into your burrito while you're sitting there eating.
That's right. Obviously, a big move here on earnings post volatility, and actually is holding the intraday. What's current print right now? 599 or so. Yeah, that's a runaway gap if you hold and continue to maintain some of that strength. I mean,
everyone out there, think about your favorite restaurant, and now picture a rat falling into your food. Would you ever eat there again? Would you ever eat there again if a rat fell into your food from the ceiling?
No. I'm done. I'm finding a new restaurant. All right.
That's the type of visualization and sentiment that caused a lot of Chipotle to be sold off. Sold off.
All right, let's move on. Dow Jones Industrial next here, Marky, as we break down the markets. Let's talk about large caps. I felt like large caps had relative strength against the S&P because of the moving averages. We were below the 200 on the ES or the SPY, but on the DIA, we are above it. Give me a read here on DIA.
It's no different than the other market. I mean, no different than the SPY. I mean, if you go across almost every major ETF that's used as a gauge to judge the broad market, even small caps, you're going to see similar patterns. So the market is really trading together. There's not a lot of separation. I mean, if you want to know if the trade war, because the Dow got hit harder last February and March during stretches on trade war news because of the components and because Caterpillar, Boeing. If you want to see if there's real fear to do with the trade war, I mean, and here is your $1 million line from this or jab. If you want to judge if this is a technical sell-off or just bad news, or if it is really trade war related, check out Boeing and check out the Dow relative to the S&P 500. Because when there was real trade war news last February and last March, and there was real fear, the Dow sold off more bigger, Boeing would get killed, absolutely slaughtered during trade war news. Caterpillar would get killed. Look at Boeing. Boeing's down 1%. Look at the S&P 500. It's down even more. This is the trade war headline is what's causing the sell-off today, but it is not real. There is not real fear. There is not real negative sentiment. This is all an illusion and an opportunity. This is the type of nonsense that spooks novice and beginning traders. If you remember last February, remember last March, when there was real fear. Oh my gosh, we're putting $200 billion worth of tariffs. Oh my gosh. And people couldn't conceive it. The Dow sold off more than the S&P 500. Companies like Caterpillar and Boeing would get hammered. You're not seeing that today, are you?
No, this is normal market behavior. I mean, come on, we're down 1.4% within an ATR range of the market. It's not like we're having a big crashing 3.5% day on high institutional volume or something. The market is down on news. The Dow is coming down. One company that is going up is Walmart. Out of all 30 Dow components, it is the only stock that is up here today. I like this company. I like what they're doing. I have change my tune on this. I used to rant against how this was the evil empire and they took advantage of people and you should never buy them. I really like what they're doing as a corporation, quite frankly. They're moving in positive directions with their employees and pay, and also their profitability is strong, Mark.
Let's be honest, because they have to, because we have record unemployment, they have to treat their employees a little better. Now, one reason I love Walmart is because they don't treat their employees that good. You know, I mean, I am not like my brother Matt. I like an evil company because an evil company will continue to put dollars in my pocket because they're caring about the bottom line. You could do a lot worse than a good cash flow stock than Walmart. Little bit of a dividend, high enough volatility to get a little bit on a covered call. You could do worse.
Cody, get that on Twitter. I like an evil company. Get Mark's image and let's meme that thing out. I agree. I know that Mark does not mind. If he makes money, he makes money. And I get that. I respect that actually as a capitalist. You know, I do get it. If somebody truly is evil, a la Monsanto or a Walmart back in the day, or when I thought Goldman Sachs was rigging the market, I would not play them for outside of trading windows. I'm not going to invest in something I don't believe in. It's just a personal thing. We have a difference of opinion on that. I get it. Walmart, though, Mark, one thing I love about the company.
Listen, if you want to feel good about yourself, take the money you make from those evil companies and then go do something and volunteer it or donate it.
That's environmental hedging, by the way. That was Bobby's system. He would trade evil companies, take the profit out, and reinvest it into good companies he believed in. You know, that's what environmental hedging is, actually. Walmart actually makes money, though. Their revenues are strong. Their actual profitability is strong. If it breaks 100, Mark, that's tradable. That's an inverted head and shoulders, you know, shoulder, head, shoulder, break out of 100. I love the trigger. I'm not trading it here, though. What's your read? Would you play this pullback into the 100, or would you need it to clear that 99, 100 area?
Well, Liz, I have very little interest in trading Walmart. It's not the type of stock that I love to trade. It doesn't have those huge moves. There's just something about it. Walmart is one of those companies I love looking for opportunities to own. Mm-hmm. So when the entire market is going down, like it did in December, I really like Walmart and to find these great companies I really believe in. I mean, I believe Walmart will be around when I die, whether that is tomorrow or 35 years from now. Walmart will be around and strong as ever. I truly believe in the company, in the business model, in the management, in everything about it. So when we have significant sell-offs, this is one of the top of my list to come to and try to find an opportunity to get in cheap. Mm-hmm. Get in cheap. So it's one of those, I like opportunities on Walmart. I don't treat it as a growth stock. I don't treat it as, it's not in my trading signals. I mean, that's how I treat Walmart.
Yeah. It's more of a dividend payer, more conservative company. If you're looking for less volatility, I mean, AMD and Walmart are like on the opposite spectrums when it comes to price movement and action. Walmart going up here today. Biggest loser on the Dow is Dow DuPont, Goldman Sachs, Pfizer, Apple, Caterpillar, all down. Market is showing me a little bit of a turn here on the bottom intraday, though. So maybe we're going to get a little recovery.
Goldman Sachs is a great example of relative strength. What's okay now when you're out there picking trading candidates, and we know what the market's done over the last month. What has Goldman Sachs been doing? It hasn't been taking off. It hasn't been, oh, let's keep on running like many stocks have been. It's been trading sideways. I mean, the relative strength of Goldman Sachs to the market itself has been really, really weak. So it's not surprising that when the market has a down day, the only thing really holding Goldman Sachs up since earnings has been the market. There isn't a lot of strength here in the sentiment of the stock.
No, and even technically, if you break that gap point that it put in on the earnings on January 16th, that would be a very weak signal, relative weakness here on Goldman for sure. And as I look at across the Dow mark, Goldman's weak.
Gap level there, that is a classic signal. A lot of traders look for support to form at that gap low point. So if you break that 185 level, you could definitely see some severe downward movement there.
I agree. The biggest movement today across the market, though, is in technology. Let's take a peek at the NASDAQ. It's got 90 stocks going down, 10 stocks going up on the NASDAQ 100. Looking across the strength and weakness, Electronic Arts, Take-Two, Activision, some of these gaming stocks are going back up after a post-earnings move. Give me a read on the NASDAQ first, Mark.
I mean, once again, the same general pattern. You're off a little bit. But it's the same general pattern. You're holding the 9 as we speak, just like you are on the other markets. You've had the same general trend. You've seen the same general trend. So there might be more overall losers. But you don't see any, I mean, until you break that relative strength, until you see a clearer signal, I don't know. It looks pretty similar to me.
Yeah, one of the stocks that is selling off here today is one of your favorite companies, Micron MU. They had a very volatile year last year, and I know that you like to play these guys in different ways, like straddles and bidirectional and whatnot. Where's Micron's fundamentals at now? Do you still have?
Right, so Micron's a great company. Bottom line, Micron's a volatile stock. Now, the unique aspects of Micron and some other chip makers. So when we look at technology, we might say, hey, same general patterns. Chip makers are really sensitive, Micron in particular, to trade war news. And Micron freaks out on any news. If you got to know the personality, because not all stocks trade the same. Micron is a very unique stock in how it reacts to any news. It will sell off dramatically on negative news headlines. Micron does an insane amount of business with China. If you ever had an escalated trade war, Micron could go as low as $10 because they could be targeted specifically as an example in China. Like, they're just really, really, really sensitive. But you're not even below that 9 moving average. I mean, you see how it treated today. I mean, it bounced right off the 9. I mean, that's not real fear. Micron's always going to be up and down more than the market. I mean, it's just a crazy stock. I love it, but it has its own unique personality.
Well, that's true of chip makers in general, though. I mean, AMD and AMAT and Micron, they're all going to fit into the same basic family. I know they have slightly different models and whatnot and different business adventures, but Micron and AMD, they're correlated, and so is AMAT, right? So they tend to move a little bit more than the market.
Semiconductor traders are like startled rabbits looking at cars driving down the road. Big, huge eyes, freaking out at every movement on anything that might happen. Semiconductor traders are some of the most neurotic, hypersensitive individuals the human race has ever produced. If you ever follow message boards or that on semiconductor chips, that's just what happens. It's crazy. And it creates these, I mean, the world is always ending or the world is going to hit the biggest thing ever. That's how they just are really, really neurotic and hypersensitive.
So maybe the semiconductor traders are all now trading pot stocks for the anxiety. Is that?
Well, they need to take some of the pot stock products created to chill out a little bit.
Yeah, old Cron CGC. In fact, take a quick peek at Cron, Mark. I know it's been on our dirty, sexy money list, and we've been targeting it for quite some time. Now, it was parabolic there for a bit. Now it's pulling back here, technically only. You got to like the pullback. In fact, what is that, up 5% here today, showing strength?
Listen, I am not even going to pretend. I talked about Cron the other day. I am not even going to. What's Tilray's?
TLRY.
TLRY.
Mm-hmm.
Listen, this whole space is just insane. Like, I don't even pretend to apply technical analysis because I don't think it really applies. I think the volatility surrounding pot stocks is so enormous that it makes technical analysis almost moot.
Mm-hmm.
Almost moot. If you just want to gamble and be like, I want some pot stocks because I saw a headline, more millennials own pot stocks than Apple.
Crazy.
So if you just want to gamble and say, hey, I own pot stock, and like, that's great. I have no way to judge the fundamentals. There's not enough information, and there's nothing that's going to tell you, oh yeah, that's a good investment based on these fundamentals. Just forget about that exercise. Save any time there.
Mm-hmm.
Volatility is too high. The only thing I can say is wait for prolonged periods of sideways movement and then play the breakout. But when it gets in this situation, this is pure gambling. It is pure gambling. And that is from someone who believes in technical analysis and would fight anyone on the street that said it was hocus pocus.
Mm.
But it's just, there's too much volatility in any given day to make technical analysis rendered useful.
I would like to recreate that as a comedy skit. Have Mark walking down the street, Cody, and somebody say, "Hey, I don't believe in charting," and Mark puffs his chest up, and I
would judge how big the individual was before I determine my level of anger.
See, he's taking in technical analysis, even to the joke. He's like, wait. First, I would analyze the size of.
So we would have a fair, a really, really big guy, MMA style, kind of muscles and guns and everything. And Mark says, fair point. I believe in the
then I would judge how much money he was worth, because I would take a beating if it produced a huge payday. So there's a lot of factors that would go into how mouthy I got in the situation. If he's a big, huge, poor guy, I have no interest. No interest.
Oh, guys, if you're out there, Team Tackle, give us a quick like and share. We always like to hit that 50% Fibonacci retracement on our likes and shares. If you're watching this back later, comment in the comments section. It really does help our SEO, get the word out, get viewership on our YouTube channel, and get more people in the community. I mean, that's the end goal for everybody here as well, to build a dynamic community. As we go through the market, Mark, RTY or the Russell 2000, you can look at IWM if you want the ETF version of it. Small caps are sensitive to trade news. There's no question about it. And different markets, different spaces, different industries. This one would take it on the chin the most. It's actually holding up relatively the best here today.
Remember what small caps did when trade war was the number one storyline in the market? What did small caps do? You remember last year? They outperformed.
That's right.
They outperformed, and by a sizable amount. Breakouts and signals came earlier on small caps. There was this general thing that if you have a prolonged trade war, well, small caps are insulated because they don't do as much business overseas. That was the general thesis. And small caps outperformed during those stretches. Now, the pattern on small caps looks pretty similar to all of the markets in 2019. Everything's holding its 9 EMA, though. Like it's just, there's not a lot of fear out there.
Mm-hmm.
Now, let's say I'm wrong. Let's say 2 hours from now, the market crashes and you're like, Mark, you're an idiot. Hey, it happens. It happens. What you'll want to do is, you see how we have a test of support, horizontal support in the market, came down, tested, and then what did it do? Came down and tested and held. Very, very strong sign. If this horizontal, because make no mistake, we've seen the market freak out and sometimes have moves down purely based on technicals.
Mm-hmm.
And I'm going to go into that here in 1 second to show why that might occur. Watch that horizontal support. That is going to be hugely critical to determine if today is a freak out day. We have had a few huge, gigantic day. The only reason they went down as much as they did is because of the technical situation. That horizontal support area could be very, very telling if it breaks out. That would be your first sign that, because if you look on the charts, there's a ways to go. That line signifying that horizontal support level, there's a ways to go till the next support level. So when we talk about technical sell-offs, that, oh my gosh, why did the market go down 700 points today? Oh my gosh, is this the end of trading? If you've been around for 14 months, realize, hey, these have been opportunities time and time and time again. Sell-off in November and December. The sell-off last February. These are opportunities. There is nothing structurally wrong with the market right now. There are no structural storylines that is going to turn this into a bear market. But you can have freakout days where there are no existing levels of support to help prop up the market. Because remember, most of this is day trading and computers going on right now. A lot of institutions make their moves at the beginning and the end of the day. Right now, a lot of computers are working algorithms, trying to make a few dollars here and there. And if that intraday support level breaks, there is not, for several hundred points, room to the next support level. And so you do have the potential of a freak out day in the market where nothing has changed. I would love that to occur. Because it would provide some great opportunities. I know a lot of people out there that have a lot of bullish trades are like, Mark, shut the hell up right now.
Well, you should know how to hedge it. I mean, if all you do is go long the market all the time and you don't ever know how to put a brake pedal on in the form of a stop loss, money management, or a put option, you are just simply a passive investor. You're not actually trading and you're not actually educated about how to do it. Now, if you're team tackle and you're here, you should know how to hedge your account. You should know how to buy a put option. You should know how to short. You should know how to set stop losses to protect against downside risk. I love the analysis though, Mark. I'm with you 100%. This is not going to change my posture today on one red candle. Now, again, you have enough freakout days in a row. You have to respect the action. There's no question about it. Let's go through the rest of the markets here. Let's go to the dollar sign DXY or the UUP, either one. US dollar index next, Mark. Dollar up. Commodities are down here today. Quite a few headline news out there. The Eurozone sees weakening, global slowdown. Instead of 1.9% GDP, they expect 1.3% GDP. You have more Brexit news that was flashing in the headlines. Same thing for 3 years now, it feels like, with the Brexit stuff where they can't get anything done. The dollar just ever so subtly is now in a W pattern in a neutral range, even potential little breakout and run here. I'm bullish the dollar. I established that in the prediction podcast at the beginning of the year. I talked about my expectations for the dollar, but that I might even change my tune on because that was when I thought they were going to raise rates, and Powell has backed off of that. Why is the dollar up here the last 6 days, Mark?
I don't have a freaking clue.
Yeah.
Now, I pride myself in only speaking when I think I know something. I take my role as an educator very, very seriously. I really do. And so when I say things, it's because I'm not trying to get more hits on our halftime report. I'm not trying to, no, it's because I believe it based on experience, based on my analysis. The best guess I have is a technical bounce off the 200 daily. Like that's my best guess. And then just momentum kicked in. It just kicked in. You have erased all of those Powell gains. It is concerning from a bullish standpoint. You definitely look at this resistance level. It might be a good short-term. The rally might be fading out as it hits horizontal resistance. I mean, there's been momentum. I mean, this is one of those things that when I expected more sideways movement down here, and then it just took off. I mean, it is one of those things that just because you have an opinion, don't trade your opinion. You can use it to look for certain setups. But right now, there's a lot of momentum on the dollar.
Yeah, for sure. I mean, that's 6 green candles in a row on the most important instrument in the marketplace, even more than stocks, in my opinion. Dollar up, commodities down here, Mark, is what's happening. Crude oil is down again today. In fact, it was down the most aggressive across most markets. I saw one of the headlines, and that was one thing that we were talking about in pre-production. The trade stuff, Kudlow, all that, we kind of process it. But this headline was not one that you can just bypass, right? And that is that Russia shrugged off an immediate increase to cooperate with OPEC. If Russia and OPEC don't get along and you see pressure in the crude market, that could be a bigger storyline, in my opinion. What's your take?
I'm eating my Pringles chip. All right. We had a potential breakout scenario in which you never received confirmation. This is why the word confirmation is so critical. If you don't know what confirmation is, we don't have enough time to go into a lengthy discussion on that, but we have not so subtle product pitch. We cover that term in traders' lounges and pro products at Tackle Trading all of the time. It is a base concept. If you want to know more, check out, go to Tackle Trading, email me at team@Tackle Trading. I'll set you up on a free trial. And then you can learn about confirmation and the million other things we discuss. With that said, product pitch over. This is where I think everything happening in the broad market today is hooey and nonsense. And just almost like one of those inevitable, some bad headline had to pop up to send the market down on any given day. I mean, it was bound to happen. I have no interest in going bullish anywhere in energy right now. Zero, nada. Energy is all about supply and demand. The driving force behind every trend in the oil markets, every short-term and long-term trend you see in oil, always the catalyst is supply and demand. Mm-hmm. The supply and demand sentiment, the storyline behind that, U.S. production continuing to go higher. Donald Trump in the State of the Union the other night was bragging how the U.S. is now the #1 oil supplier in the world. And while I find great pleasure in that from a energy independence standpoint, I love that fact. Absolutely love that fact. But when you have the U.S. producing at record levels and you then get a second catalyst, i.e. a member of OPEC or OPEC as a whole contributing any sentiment whatsoever that, hey, we're not going to go along with reduced production. You create a perfect storm for downward movement. So U.S. production high, and then you get that second catalyst of, in this case, Russia, alluding to the fact that they're not curtailing production or they're not going along with the plan. It is the perfect sentiment storm for downward movement. Now, one thing to know about oil and one thing to know about energy stocks, because a lot of you out there might have ExxonMobil or BP or name your very popular, very many energy stocks out there, or an ETF like XLE. These types of catalysts sometimes amount to nothing. Sometimes they amount to a couple days, and then it drifts sideways. But sometimes these type of storylines trigger prolonged downward movement that can last days and weeks and even months. Because what happens is the storyline ball gets rolling, and then it comes out with, U.S. had record rig count, or U.S. inventories were high, and it adds to it, and it creates this really, really negative atmosphere. Very dangerous time right now, in my opinion, to be an energy bull. because the sentiment has shifted dramatically in the short term. So that's my take on it.
Couple of stocks on the Tackle 25 that are grabbing my eye here today, Mark. Give me STZ real quick, Constellation Brands.
Makes me want to have a beer every time I look at their symbol.
I mean, it is one of those companies that is counter recession, in that regard. A lot of the SIN index stocks type stocks do that. You've got resistance here at 175. A breakout would be tradable here.
And Constellation Brands, once again, I don't really like, and it's the same logic behind Walmart. I don't like some of these consumer staples type companies as great directional trades, but I really like them as cash flow. It's one of the reasons I gave thumbs up vote, put them on the Tackle 25. A reasonable cash flow stock, not a great directional play, but you're certainly seeing stability.
Yeah, definitely. I like the stability. I like the movement here. And another one, Boston Science, they had earnings, and the earnings did not bring the company down or up. BSX.
BSX, that's right.
They are pressing the all-time high here, guys. That $39 mark, and strong earnings as well, carrying through on a day where the market's down. It's showing strength. You got to like the relative strength out of Boston Science here.
Once again, another stock. Listen, if you ever want to watch and feel like what it is to watch paint dry and doing a directional play on a stock, do a directional play on Boston Scientific. This thing moves so freaking slow as a general rule. I mean, we have stellar days where it moves 35 cents. I mean, it is a general rule, a very boring stock. That's not necessarily a bad thing, especially as a cash flow investor, but not a get rich, hey, I'm going to make a lot of money, but also not a terrible stock for a new trader to practice some techniques, because it just doesn't move very fast.
Sure.
You have to make better trading decisions as you're trying to learn certain principles, but respect resistance. And if you do break through this resistance, level, this horizontal resistance level that's formed, which you might, positive earnings, positive sentiment, you break through, that might be a really as good as it ever gets for Boston Scientific on a directional play. You're not going to make $1 million. It's going to be a slow mover. But once again, if you're a new trader and say, I want to place a live trade on a breakout, well, it's probably not a bad one to get your feet on, because it just doesn't move very much on any given day.
After the bell today, there's not a lot that have earnings. Fiserv, Mohawk, there's a few different names that grab my attention. Skechers has earnings tonight. Tomorrow, Cody, C-O-T-Y, not you, Cody. Goodyear, Tire, Phillips 66. The CBOE has earnings as well. Always double check the earnings dates on any company that you trade. Two last symbols, Mark, we got to break down: gold and Twitter. And I want to talk about both of them. Gold, obviously, on a little bit of a pullback here. Dollar up, gold down. And GC, or you bet, that works too. Pullback, pivot, moving averages. I love gold lately. Of course, it's been in a beautiful uptrend, and everything's been moving on the upward side of that. You're on mute here, young man. What's your read on gold?
My read on gold, and I've talked about this on the Coaches Show and on Two Different Traders Lounge. Shameless product pitch. Go fill out your 15-day free trial. Email me at team@Tackle Trading. I'll get you set up. Like gold a lot as a cash flow play, like gold ETFs, like gold mining stocks. Huge fan of gold as cash flow plays. You're going to see gold is not the type of thing. No thing goes up every day. No thing goes down every day. But gold certainly doesn't go up or down every day. You have a lot of news influence the day-to-day movement. But the stability of gold, the trend of gold, the fundamentals of gold are really positive. I mean, we see that the dollar's up, but the gold futures are only down a fraction. In fact, now hitting into the positive. And that's with the dollar up. Imagine if the dollar curtails, because it eventually will. Really positive situation on gold. The sell-off, even with the dollar going up, has not been that dramatic. Great cash flow opportunity on gold I see for the foreseeable future. Now you want to go tweet or face, do you?
Had earnings, it gapped into support. And the earnings report is one of these that's really interesting to me, Mark. They lost some of their revenue. They actually had some mixed numbers at best. They issued that they're going to see decreasing, profitability this year, but mostly because they're going to continue to reinvest into their company and the way that they do it. A lot of their subscriber growth was down because Twitter has decided to kick off as many bots as they can. They're going the complete opposite direction of other social media companies like Facebook, and it's hurting their bottom line right now. The investors did not like it. They did not like the growth numbers they saw. It's down 10%, but I actually really liked it when I was digging into the report. I'm very interested in this company, but it would have to almost break out of 37 at this point for me to call it anything bullish. Right now, a gap into a range is neutral. Any read on the gap or Twitter in general?
I want to say something on Twitter in general, off the point that you were just making. Twitter kicking off their bots. So like Facebook had fantastic, because I looked into this a little bit myself. Facebook, had great earnings because of the ads and things. But then they also mentioned that they're, these fake bots that are clicking on the ads, and then the people who are paying to put these ads out there are having to pay for these bots clicking on them. So people are getting a little upset, realizing that their ads that they're paying for aren't getting nearly as many views as Facebook's claiming. Whereas Twitter, who's saying we're going to try to eliminate these bots, I see that as a better outlook that basically says, hey, we have a more pure form to advertise on over, say, Facebook or Google. So as a company, I like what they're doing here.
Mm-hmm.
I think Twitter one day will be 17 reporters looking for validation, and that's the existence of what will remain on Twitter. So I hate the company. So what's funny though?
How do you like to compare to Facebook?
I love Facebook a million times more. And the reason I like Facebook a million times more is I don't think the social networks created on Facebook that I've created, my mom's created, my sister's created, that Tim's created, I think people are too invested in that for anyone to come along and shift that. The base Facebook users, they're participants in the community. The vast majority of Twitterers are followers. Facebook is ingrained in the day-to-day activity of billions of human beings, or at least a billion?
Yeah, I think I saw some crazy stat that if you count all the Facebook users across the globe, it's like the third largest organization behind like the Catholic Church and somebody else in the entire world, And
so that's ingrained in their day-to-day activity, how they connect with members in their community. And by community, I mean in the broad sense, their family, their friends, their distance. And so how they interact with that, I don't see that ever changing. Mm-hmm. And it'd be really hard to disrupt. I mean, that is why people were amazed and said, even with all of the BS Facebook's faced, they haven't lost anybody. They haven't lost anyone. Twitter, and this is my analysis whenever I think long-term. Now, I'll trade Twitter bullish or bearish, I don't care, on a short-term basis, but I'm just talking long-term, 10, 15, 20 years from now. Twitter, for most human beings that use Twitter, it is a way to be entertained and receive information. That is a much different dynamic than the social construct that's been created in Facebook. So if there are more clever ways to get information or be entertained, then that can shift Twitter and make it obsolete. Much harder to do with Facebook because of the personal investment human beings have made in building their own personal networks in Facebook. So,
and I had a great question from Brian coming in the chat, and I just want to answer it here. Brian says, pardon my ignorance, what's a directional play? Brian, when you buy something believing it will go up in price to make money, that's directional. Or when you sell something short that it will go down in price, that's directional. When I'm coaching or mentoring anybody, I'll usually tell them, learn how to execute just stock first before you start trading directional options, futures, or Forex with leverage. Just learn how to button hook 100 shares of stock. Buy it, set a stop loss, and put a target on. The stock report will help you with that. Now, a non-directional trade is where cash flow comes in. And the most important one to get started with, Brian, is the Tackle 25 system, and learn how to do cover calls and naked puts with that system. Very, very good job, Mark. Great job today. Cody, good job on everything here. What a fun show. I had a blast. I am enjoying having Mark and his Pringles. Yeah.
His Pringles and his raw just.
First of all,
this is the way it is.
Somebody's got to pull the.
Because it is the way it is.
I like evil companies.
Things are the way.
It's already on Twitter. It's already on Twitter. I got it. I like evil companies.
If you had to bet, what is going to be around if only one of two? One dies, one's still around, Facebook or Twitter 30 years from now. Which one is it?
Facebook.
Yeah, it's Facebook. I don't think.
Give me those again. Give me those again.
Twitter or Facebook, 30 years. Which one's around and which one isn't?
Twitter.
You're a freaking idiot.
I think Facebook could die. The only reason why
Facebook so bad, it influences your normally logical.
No. Fundamentally, from a company standpoint, they could evolve. Okay. So Facebook could evolve into something else. What they've done, if they didn't own Instagram right now, I would probably look at that company completely different. What they're building with Instagram and the different evolution, they have so much money, so much infrastructure into the tech and the way they do it. They're going to be around as well. But I actually think Twitter as a brand is a better 30-year bet than Facebook, because I think Facebook, it has flawed leadership, Mark. I mean, they're willing to.
And that's what your analysis comes down to. You hate Zuckerberg. You hate the Zuck. You hate him so bad. What is it about?
Who likes Zuck? Who's like, you know what? Zuckerberg, that's a good guy. I trust that. I'd follow that guy into battle.
Nobody likes him. Nobody likes him. I mean,
he's a weasel. You can tell.
I mean, here's the thing. His old college girlfriend, which inspired Facebook, she was thinking about giving Zuck a chance, but even she's like, "Oh, this guy is just too much."
Same thing in sales, same thing in business, same thing in relationships, Mark. The very first thing is rapport, likability, and trust. And most of us as human beings establish that based on our instincts. He's a weasel. You can tell. I don't like him. So yes, you're right. I have emotion about that.
I know, but what is it about him? Because you really hate him. I dislike him.
I can tell he's lying.
He does something.
I can tell he's
under
lying.
Your skin.
When he goes in front of Congress and puts that fake bullshit out there about, oh, we're going to try to do better as a company, and the message. And first of all, we know there are internal emails that did not happen, that they will sell data, that they will run people down. I'm not going to allow myself to go on an emotional rant right now. I got trading.
He was stepping up on that soapbox. He was starting to stand up there. He was about to start preaching. And he's like, wait.
Do it on the podcast. We'll do it on the podcast. We got another podcast coming out here next week. By the way, loving the podcast.
Why we hate Zuck.
Why we hate Zuckerberg.
That is a good topic. I like it.
I just dislike him. I don't hate him.
Yeah. Well,
Yeah.
You're willing to invest in evil companies. We've established this today.
Listen, Facebook makes more money if they can sell data.
I get it. All right, guys, we are out here. Great job today, guys. We'll see you tomorrow.